Well, good morning. Quick update, video update for members. And let's just go through. I've got all the charts up here. Not a lot has changed since yesterday. As you can see on the euro, for example, we're still at the top of this megaphone pattern. And we're still in this trade short. Our stop's at 10777. And right now we're at 1075-ish, so about 25 pips away. And we're just probing the top of that megaphone. Yesterday's candle, very tiny little range. Actually, one of the smallest ranges that we've seen. Well, I don't know, going back, nothing on this chart, and this goes back to August. I'd have to go a long way back to find a daily range as tiny as that. So it could be considered a star doji at the top of this pattern. But we are in danger of breaking out of the top of this megaphone, and we could be caught short yet again. Well, when I say yet again, we've been in this trade for a couple of days, so nothing's really changed. But we might be moving higher. If we do break through the top of this resistance and the megaphone, we could be heading up to 1.09 and possibly even higher. Let's hope that this holds. Pound, we're short on the pound as well. Just slightly negative on this one. Same sort of thing, very small daily range yesterday. These are all day charts. And, absolutely minute daily range. Not much to add, really, apart from that we're at resistance. If we put a Fibonacci in there and draw a line across here, you can see that we're right in the middle of this resistance level formed by this area here. And, well, I dare say that's a 50 or a 61.8% retracement level. Let's just have a quick look. Yeah, so that's exactly a 618% retracement level to the top of the candle 2 days ago. So we'll have to see what happens on that. And a lot depends on what's coming up tomorrow. And the markets are just waiting really for CPI data and jobs numbers to come out. And we're in a holding pattern. I'm not even going to look at the Aussie and the New Zealand dollar because these are all dollar pairs, these ones along the top. And whatever happens to the dollar index will affect all three of these, all four of these. So there's not much to be said. Now, when it comes to Euro CAD, I'm still pretty bearish on this. We're still in this short trade. Remember, this is the one we took yesterday with a very small stop loss, 20 pips or so. So it was worthwhile taking. We took it based on that pattern there, that hanging man. That hanging man pattern there, this one. Was it this one? I think it was this one. That hourly candle. And since then, we've just moved sideways. Actually, an hour ago, just before I made this video, we got another reversal candle right there. We'd like to see this hold beneath the current level. The danger is, of course, with this EuroCAD, as I pointed out in the last video, that we do have the top of this potential bull flag beckoning, and we might have to test the top of this before we try another short. This one was worth having a go at with a 20 pip stop loss, so whether it wins or loses, it's really of no serious consequence. And there's plenty of room on the downside if we get through this area here, which is a flat bottom breakdown. If we go back to the hour chart on this area here, this flat bottom, and now we're forming another ledge, another flat bottom. So if we can get through a breakdown through this flat bottom, flattish bottom, not quite flat, but flattish, and then, excuse me, a breakdown through this flat bottom, there's loads of room to the downside for us to get a decent move. And this line here is that channel bottom. This is an hour chart I've just switched to, the channel bottom on the day chart. So we should be able to get down to there at about 1.42. And we're in at 1.442, so 1.44. So that's a 200 pip move. And if we do get through there, there's loads of space before we get to these moving averages and the next support. So risking 20 pips to gain possibly 100 or 200 is well worth it. And if we lose 20 pips, so be it. That's part of trading. We're not going to get everything right. Pound CAD, we've got nothing on any of these others. So basically we're short Euro CAD, we're short Euro dollar and pound dollar. And today might just be another very quiet day. Let's have a look at the yen pairs. These are all day charts. Dollar yen, again, very tiny little quiet day. I expect this to eventually move down. if you're trading the dollar yen, you see I've got these lines drawn in up here. First of all, we've got the confluence of these two moving averages, a 200-day moving average. That's a very tempting level. I'm not trading this until we get a bit higher. If we get a bit higher, I'd like to see us testing one of these lines here, forming a head and shoulders, potential head and shoulders on the day chart. So if we could get up there, it would be really nice. We've got a nice bottom here, which is like a shoulder, head and shoulders pattern bottom. There's the right-hand shoulder. And if we can form a decent left-hand shoulder, either off the 200-day moving average, the 50-day moving average, the 100-day moving average, or these two potential shoulder lines, that's what we'd be looking for. So we're not trading this until we get something along those lines. It may well just continue to break down. We've seen the staggered move downwards, so it might just continue in that fashion. We'll have to wait and see. Euro yen, we're short on this one. And just going to have a look at the other charts across over here. Yeah, so we're short on the euro yen. Basically, all the yen pairs I'm looking to sell at. I'm hoping that the yen will strengthen based on the interest rate decisions that the Bank of Japan, the noises they've been making, provisions they've been making for interest rate rises up to 0, perhaps, and maybe even slightly higher, maybe 0.25% plus a positive 0.25%. And we've also seen inflation steadily rising in Japan. They're going to want to do something about it. They don't want this to get out of control like it did towards the end of last year when we got up to 150 odd on the dollar yen. That's just simply not sustainable. And so they don't want this to get out of control again, much like the Fed doesn't want inflation to get out of control. And that's the same sort of thing, really. So we've got problems with inflation and interest rates in Japan, and they're battling, although around the 0 levels rather than the 5, 6, 7. I think their inflation rate's just gone up to about 3%. In the States, it was as high as 8%, 9%, something like that, maybe over 10 actually at one stage. So we're not in that. We're not in any. So we're in this one for those reasons. In the euro yen, I think we've got a good resistance here. I was hoping to hold beneath this 20-day moving average, but we didn't. So we have moved up a wee bit, but we got resistance above us. Our stop loss is at 142.50-ish, so not too far above us at the moment. So we might have to take a loss. But we've got loads of resistance above us. All of this area here, where we are at the moment, is pretty good resistance. And if you have a look at the longer-term chart, we'd like to see the dollar yen falling, the euro yen falling back down. I pointed out in my last video this huge amount of volatility that we've seen in the yen crosses, and this one's no exception. Massive. This is sort of last year, this area here, and if you go back to the previous year, and the previous year, and the previous year, you can see that this is not something that we're used to. So when we take these positions on euro yen, we have to allow for massive daily ranges, and therefore we have to reduce position size. So all of you who are trading along with me and the others, remember that when we're trading these pairs with big stop losses, there's a reason for the big stop losses, and that's because we've got to deal with massive volatility. We can either stay out of the trades or we can deal with the big stop losses. So if you stay out of the trades, well, that's fine, that's fair enough. But if you're going to be trading with big stop losses, then just reduce your position size to keep your risk level the same. We're not trading pound yen. This one is the one that's most interesting to me, euro, Japanese yen. We've got this beautiful, I keep on pointing it out, and it's been going on since, well, almost a year, this pattern. You can see the volatility in this as well, but it's formed a nice pattern. So we've got this royal crown, we've got resistance overhead, we've got all these Fibonacci levels above us. We've just reached the 38% fib, which is the area where we'd like to see it turn around if it's a strong trend downwards. And look at all these areas of support and resistance around, well, particularly support around this area. So this area that we're in is really important, forms part of this overall pattern. It's the trend line, the 50-day moving average, Fibonacci level. We've got the fundamentals in place for a strengthening of the yen against a variety of currencies. So, and we've also seen a bit of weakness in the Australian dollar. So I think all of that I'm really happy with. But once again, bear in mind, we've got big daily ranges on these pairs, the yen pairs. If you're going to be trading yen at this part of the this phase in the market with very massive moves, huge volatility, big daily ranges, you know that you're going to have to be allowing for big stop losses, and that's exactly what we've done. So our stop loss on this one is 92.30, so well above where we are now, and up above the 50-day moving average, and up above these levels of resistance that are formed by support. Now we've got gold, a bit disappointed by gold, so let's just see where we are now. Yeah, so I think we may have just been stopped out by gold. There's a reason why I'm short gold, and I explained it in the last video. Let me just quickly pull this up on the charts where I've got the trades active. Yeah, we're still just about in gold. Pretty close to the stop loss. Stop loss is at 1887. And we're at 1881 right now, so pretty close to there. But if you have a look at this chart on gold, we really do need a correction. We need to get back down to some areas where where longs can reload, where the market can consolidate, where the market can pick up some better support. We haven't seen any real retracement since this move off this triple bottom over here. A little bit over there, but just really edging higher. I'd like to see gold come back into these levels. Have a look at yesterday's video, the links on the Telegram, and but we could move higher. So, like all of these things, we're in a state potentially in a market change. So, you know, when markets change direction, there are problems in trading because we then have to. You know, there's a period during that change when markets can fluctuate in both directions, and there's a great deal of uncertainty. And we may be in that now, or we might just be right, and the markets will then, excuse me, continue to move lower from where we are. You can see the reason why this is resistance in gold. It's a very key level, this 1880, 1870, 1850 level. It's been a key level since 2020, really. And we've had such a big rally. When gold moves up so quickly, apart from a couple of occasions where we've seen massive moves up like that, when it moves up rapidly and fast without retracement, it's not very often it does that. It did happen in 2020, but if you have a look back over, well, that's as far as these charts go back, but if you have a look at over periods of time, we generally don't get a move beyond this sort of range. We've gone from, well, this has been $250 from the bottom to where we are today. So we expect some sort of retracement. But who knows? We might reach higher. We're trading this with quite tight stops. Gold is something that people like to trade, but it's not particularly easy necessarily. We've got a position on silver, which I think the stops are at break even on that, and it may have just been stopped out. Let's have a look. I'm just looking at alternative charts here, the same charts, but with my open positions on them. And silver, yeah, so silver, we have been stopped out at break even. So there are no positions on silver at the moment. This didn't come through on the Telegram because I was away for breakfast, and unfortunately when my computer goes to sleep, it turns off the signaling system. So we'll look at silver again during today to see if we get any hourly reversals. And if we have a look at the hourly chart on silver, that's the little move there that just stopped us out, moved above the moving averages. And we'll keep an eye on this. We've moved back into resistance levels. So it's possible that in the next couple of hours we could be looking to resell silver. We'll have to wait and see what happens with that. Perhaps we'll just stick with gold. I don't know. And then the important thing here, so there's nothing else on here of interest. We've got oil, soybeans. Oh, this one here. Let me just, before we look at the dollar index quickly, this one, we're long on the pound, South African rand, basically just bouncing off this 100-day moving average, creating a nice space there, nice support, potentially an inverse head and shoulders here. If we look at the hourly chart, you'll be able to see that more clearly. So, we might get a retracement back down to 2045, 2050, back down to this 200-hour moving average. But you can see this potential head and shoulders pattern, or we might just carry on moving up from there, or we might just collapse through the bottom. A lot of it all depends on what's happening with the dollar index. So let's have a look at that. Let me quickly clear that. So we're still long on that, and I think that we've given that some space, and that might last a number of days or even a week or two, this trade. And dollar index, well, nothing's changed. So we had this tiny range in the major currencies, and you can see the tiny range on the dollar index. We're still at the bottom of this megaphone pattern. It's a reversal pattern, expanding pattern, megaphone, or there are all sorts of words. You could call it megaphone. I've forgotten them all now. Trumpet, I think. Trombone, whatever you want to call it. It's a musical instrument with a mouth that is wider than where you put your lips. Basically, there's your lip part and here's the mouth part. So let's just call it a megaphone. And we're down at the bottom of this, and we're just hoping that this will hold. Now, we don't know. I expect that if we don't hold here, and remember we've got CPI tomorrow, if we don't hold here, we could then retest this Fibonacci level, this support level, and that's at 101.30. Or we could just sort of edge down slowly along the bottom of this megaphone pattern and then eventually rally. But failing that, we should get to 101.30, which means, so that's 200 pips further, 2% roughly. So that's 200 pips on the euro, 200 pips on a little bit less on the pound, a little bit more on the pound. So you can build that into where we are at the moment. So if you look at the euro at the moment, we're at 107.50. So 200 pips takes us up to 109.50, or roughly 1.1, and that's what I expected may happen. But we're trying to see if we can get something beyond. We're trying to see if we might actually not get to those levels. When it comes to NASDAQ and S&P US30, I don't think we might just see, look, we're not going to see a lot of action in equities until we get jobs and CPI tomorrow. So expect more of the same, and this is what I said yesterday. We're probably just going to range between this red line and this green line on NASDAQ. And S&P, we could go up to maybe test 3970, 3980. That's the 200-day moving average and the top of this pattern, trend line. But, we might just move up a little bit to there and then back down, that sort of thing. But we don't expect any real directional move until we see the numbers for consumer price index and the weekly jobs report. And the same goes for, so we saw Amazon moving up quite nicely, we saw ARC moving up quite nicely, Apple, a few of the others, Tesla didn't go anywhere. So not much happening in stocks, and that's what's going to influence the market more than anything else. Jobs and CPI. Take care, have a great day.